Good evening, everyone, and welcome on this Thanksgiving Eve. Susie has the night off. It was a quiet day on Wall Street ahead of the Thanksgiving holiday with a winter-like storm blasting the East Coast with snow, sleet, rain, and temperatures that would freeze anyone's giblets. But gobblers, they gobbled up enough stocks to push the Dow and the S&P 500 to a new all-time closing high and the NASDAQ to a fresh 14.5-year high. And this happened despite another slump in oil prices and a flood of economic data that was as soggy as the weather. Steve Liesman takes a closer look behind the numbers and what they may mean for the economy moving forward.
The weather turned sour ahead of the Thanksgiving holiday, and so did the economic data. A feast of economic reports, released earlier than normal due to the holiday, mostly came in below expectations and raised doubts about whether the upbeat economic data from the third quarter is continuing into the fourth. Business investment fell in October when the street was looking for a gain. Jobless claims spiked up by 21,000 to register the first read above 300,000 since early September. And lackluster housing data came along with a lukewarm report on how much Americans spent and earned in October. Still, economist John Riding remains optimistic.
We're 5.5 years into the recovery. One wouldn't expect it to be booming at this point, but the economy is advancing, and it's advancing when you compare to the difficulties Europe are dealing with, or you compare to some of the countries in Asia. I think the state of the expansion's in fairly good shape.
But it's hard to argue after today's data that we're headed for another plus 3% quarter of growth. More likely, the U.S. is on track for an average quarter, with growth around 2.5%. Enough to reduce the unemployment rate, but not enough to make up for lost ground from the financial crisis. The 5% savings rate reported today suggests that when Americans have a little extra money in their pockets, either from higher incomes or lower gasoline prices, they remain cautious, inclined to save it rather than spend it. Retailers can only hope that doesn't remain true when spending starts in earnest for the holiday season. The proposition that the U.S. economy is accelerating gets another chance to prove itself next week with important surveys on manufacturing and services. And then there's the much-watched jobs report. Economists looking for 200,000 plus jobs to have been created in the month of November. That's 200,000 more people with money in their pockets to spend for the holiday season. Have a great holiday. For Nightly Business Report, I'm Steve Liesman.